Hello. I'm late. Am I on the right stream even? Am I even on the right stream? I don't know. How are we all doing? Sorry, I'm late. I was getting my hair cut. As you can see, it took a lot longer than I expected. So I've just literally rushed home. And yeah, there you go. The euro rate's out. It's 4.5. So didn't really need me to be here, did you? Because we knew that was going to happen anyway. It's 4.5. So yeah, as expected. But that's not what we're here for anyway. The main thing that we're here for is the press conference. So that is what we will focus on. So sorry I'm late. I completely mistimed the hairdressers and turned up and there was about 600 people there. And I thought, oh, it'll be all right. And then it took forever. But anyway, I'm here now. So good afternoon, Danny, Peter, Evans, Amy, Rico, Michael, Daniel, Ross with, I can never say your name, Chucks, it's time. Amy, Lee fell asleep, waiting for the end to move. Yes, we'll have a look at that in a minute. On the phone with Lagarde, trying to get some info. Yeah, not sure she will talk to me. Travel to Japan to tell him what they should do. Yep, would have liked to have done that. Has anyone poked him in chat? Maybe he thinks it's 1:30. No, tell my hairdresser. But anyway, looking slick. I've still got hair everywhere. You know that itchy thing after. And I've also got a sty in my eye. I don't know if you can see. You probably can't. I'm not going to zoom in on it. But I got a sty in my eye as well. So my eye's all red and not good today. Afternoon, Monkey, Jimmy, Johannes. So, yes, interest rates come out at 4.5. That's what we're expecting. So, obviously, because it's as an expected result, we've just got a knee-jerk reaction. So, not really expecting a massive amount of movement off of it. It's the press conference, which is the important part. So, that is at, why is my pen not working? That is at 1:45. So, that's where we're going to get the movement. So, we'll be around still for that, and we'll see what Lagarde has to say. We've got the CPI figures and unemployment claims for the US coming out in 15 minutes as well, or just over 10 minutes. So there is the possibility for all of these numbers to come out as negatives and undo completely that US dollar move from yesterday. So yesterday's US dollar move obviously was big because, as you can see, the inflation figures went up, not down or sideways. So not good. Lots of talk out of the US yesterday about what the potential is going to be moving forward. So the vast majority of banks and institutions now see the US dollar rate reduction somewhere between July to September. We were expecting June. So there wasn't a lot out of the Fed, out of the FOMC meeting minutes, as you can see, that gave us any real guidance. So we're waiting for Powell, basically, to come out, or someone to come out from the Fed and give us a little bit more information on that. But as you can see this morning, the US dollar hasn't really done much more. We've had ever such a slight downward movement, but that's yesterday's low. We've bounced off yesterday's low. We've just had, obviously, the euro rate come in there. So not a lot of additional movement on the US dollar. It's pulling back ever so slightly. US dollar Swiss coming back down again. US dollar yen. We've just had a reversal alert on the hourly off the double top from yesterday. So we'll see what happens with these PMI figure or PPI figures rather, and the unemployment claims coming out this afternoon. But that rate for the yen, obviously, long way away from where it should be now. So we'll see what happens. Pound Swiss ADR. So we've got a few ADR hits. We'll go through the ADRs while we're waiting for the news. We've got Euro odd. So that's an ADR hit to the downside, which has just hit off the news spike there. So not a big move there. We're waiting for the press conference, as I say. Euro Swiss, blimey. Swiss franc is powering up. So this is Swiss franc movement. Very strong move on the Swiss franc today. Yeah, so that's the Swiss franc moving. Be careful of that. that's a big move on the Swissy. Potentially, we've got things potentially escalating in the Middle East with Iran and Israel at the moment, which will definitely drag us in the West. So if that kicks off, we are going to get safe haven runs, which will be Swiss franc and yen, which will power up. So that could well be a safe haven run. I'm not quite sure why the Swissy's powering up quite so much on the back of that. That kicked off when the news hit? No. So this you can see this move started before the news. So that's where the news was. That move started prior news. So big move on the Swissy. Be careful mean reverting that. That could be a start of running to a safe haven. Euro New Zealand ADR. So that's just pushed down into ADR and we're bouncing off of the news. So any of these euros, basically, not much point in trading those ahead of Lagarde's speech. Pound Swiss, obviously, that's potentially a safe haven run, but could be an ADR reversal. Always, whenever you get any movement like this on the Swiss franc that's unexpected, it could well, just undo itself. But if it is the start of the market getting a little bit jittery and wanting to put their money somewhere safe, it will tend to carry on, but it will kind of do that on the way. So we'll see what happens with that. Pound yen also has hit ADR as well today. That was an ADR hit to the upside, so we pulled back into the propulsion gap. And that was a nice 3-bar reversal out the propulsion gap. So if you took the ADR hit on that one today short, you're already out. That was your reversal. Oh, it's a bit crap, actually. Probably you wouldn't have got into it. That would have been your entry. Too much rally. Straight into ADR, look. So not really a good trade, that one today. So there's your ADRs. Nothing particularly exciting there to look at. RSI is all we've got at the moment is US dollar, Euro US, which is hit to the downside. Obviously, 4-hour RSI extension and hourly RSI extension. That's because of yesterday's move. So I'm long on that. Got in long yesterday, looking for a push back up. I'm just going to set a TP on that. I doubt Lagarde's going to talk it up, but we'll see. I'm just going to put a TP at roughly 0.5%. So that low, I'm just going to see if I can get a push up into that low off of any of this news this afternoon. US dollar CAD also extended on the 4-hour. Again, that's off the back of the news. So we've broken out up there. So we're looking for a retest back down to here. So there's an opportunity for a short play there. Bear with me one sec. US dollar Swiss extended to the upside. That's coming down nicely now on that Swiss franc move. Got another position on that. So I took 2 off of this yesterday. I took that one off there, and I took that one off there. 2 a bit close together there. So I scaled out of some yesterday. I've been scaling out of it as we've been squeezed on this. So hopefully we're going to get that pushed down now into the 24.72 zone. So we'll see what happens with the news. But that's certainly a nice move from the Swiss franc today. So there was your 4-hour RSI extension. Same as that one there. So just looking for a pullback. But hopefully a proper pullback, not just a little flag again and rally. And US dollar yen, which we know is off the charts. So I'm in 5 deep on this now, waiting for this Japanese intervention. So last night, we had loads of movement. Swiss yen ADR, so that's the Swiss franc powering up. So last night, we had lots of noise out of Japan. So obviously, we've pushed now on this US dollar yen way beyond the all-time highs. So we are now back out to, that was the high of 2022. That was your high of 2023. That was your intervention threat, and we broke it. So that US dollar news has pushed this US dollar yen beyond the realms of where we've been to before and into areas where the Japanese have been threatening intervention and the market has stalled. So we now need to see what the Japanese do. So overnight, we had At midnight, we had Canada coming out and saying open to measures to address disorderly foreign exchange moves, intervention. Prepared to take necessary action wherever possible, intervention. Declines to comment whether overnight forex movements are excessive. Obviously they are. Warns of economy impact with the excessive movements, blah, 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 blah. And then a few hours later, we have Suzuki coming on, does not want to comment on the daily FX movements. As important currencies reflect fundamentals and moves are stable, undesirable FX moves, blah, 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 same stuff. And then we had Suzuki talking again. And then later on this morning, we had Hayashi come out and say there is significant currency movements against us. This volatility is undesirable. We are closely monitoring with a sense of urgency, which is now like proper alarm bells ringing in Japan. So they are saying all the right things. So I think, personally, what we're waiting to see is what happens with these US figures this afternoon and what the Euro announcement says as to if the Euro decides to go earlier on rates, that will affect the US dollar because the market will shift positive on the US, negative Euro. That will push US dollar yen further forward, which will obviously mean that the Japanese will have a bigger problem on their hands. If the Euro is delayed probably to July to September, which is what the US is saying, that will probably slightly weaken the US dollar, which will keep the Japanese happy. So I suspect they are obviously watching. We know they're watching. They've said it. 3 different diplomats said it overnight. But I think they're waiting for the news today. So we'll see what happens this afternoon on this. But we are obviously still in the throes of intervention. The Japanese are still talking about it. There's your ECB rate. Over second half of the year, depends on the PEP. ECB's determined. Nothing exciting. Okay, so there's nothing exciting coming out of the rate statement for the euro. So yeah, we'll have to watch this. If this goes, people have asked in the in Discord, Telegram. There's lots of people asking everywhere. Right. So we've broken out this level. Now what? Don't know. Don't ask me. We've never been here. Don't ask anybody. No one's ever been here. So we're up at levels. We don't know what happens up here. We do know that last time we got here, the Japanese intervened. We do know that the last time we got here, the Japanese intervened. We do know we got here again and the Japanese threatened intervention. Then they got broken and they've threatened intervention again this morning. So what happens here? Don't know. Is there another level? No. So there's nothing above us apart from big round numbers now. So there's 153, 154, 155. Typically where we get price action moving halves and round numbers. So it could be that if this pushes further today, we're going to go up and hit a big round number that's going to trigger an intervention. We've hit the 153. We've broken that. We are stalling, but we have broken it. So your next level is going to be up there, sort of the 154 range, which is 225% of ADR. We're not going to hit that today. And then we're going up to the 155, which is your next proper big round number. So who knows? New Zealand dollar Swiss ADR. There's your news just come out on the US. That's bearish US dollar. So that's negative US news numbers. Come on, Forex Factory, wake up. So initial jobless claims 211, forecast 215. So that's as expected. Your PPI figures year on year are up. Month on month is down. And forecast. So it's actually not that negative. It's slight negative tinge to it, but not really. That's kind of more like as expected. So ever so slight unemployment claim increase, but that's, unemployment claims are not the unemployment rate. That's the important one. So it's the PPI that we're watching here, and that's ever so slightly negative, but not very. Nothing much you can say about that. So we'll see what happens. So, yeah, question is what happens next? So we've double topped today. So the market rallied 275% of ADR yesterday. Yeah, 225 ADR is the maximum on the ADR indicator because we only exceed that 2% of the year. Yesterday was one of those 2%. So it's roughly 5 or 6 times a year we ever get beyond that level. It's usually a fundamental shift which causes it, as we had yesterday. So that inflation number has pushed back the interest rates, which has obviously made the US dollar very bullish compared to what we were expecting. There's even talk of them not changing interest rates this year at all, which I don't think is going to happen. But if that is the case, we should see the US dollar, just gradually grind against other currencies towards the upside. So if that is going to happen, that's going to devalue the US dollar yen, obviously, which means that this is going to continue to push up. So the question is, what the hell are the Japanese going to do about this now? Because every other time we've got here, they have done something about it. And they've said they're going to do something about it. But they didn't have a lot of choice yesterday, did they? Because the entire market piled into the US dollar because they weren't expecting the inflation figures to go up. So we have to just wait and see. We haven't been here before. So my plan is at the moment I'm in about 3.5% of drawdown on this, which is 3%, which is not the end of the world. So I'm going to hold it this week and see basically what happens with the news. Well, obviously we've had the news today now. I'm going to see what the ECB press conference is with Lagarde, see what impact that has on the US dollar, and wait for the University of Michigan figures tomorrow. So if this doesn't move, i.e. we have an intervention off the back of that news today or tomorrow, there is a possibility that we will go into very much the same as we've just had, which is weeks worth of we're not going to go anywhere. And if that is going to be the case, I'm not going to sit in this because it's just going to cost me. That there has cost me $450 to hold that. I'm not going to sit here and hemorrhage another $500 thinking maybe they might come down. So I'm going to give it a couple of days. If we are not back below average, I'm going to start cutting it, basically. I'll probably just cut the lot. So this is an intervention play. There is no TP on this. This is basically assuming that because we've pushed hard and now broken, the Japanese are going to intervene. If they don't intervene, the trade is invalid. I'm out. I'm not going to bother sitting in it. Same with my Euro Yen. I've got Euro Yen, which is virtually break even. Same thing with that. I'm not going to hold it if the intervention move isn't coming. It's coming down at the moment. US dollar, looks like this US dollar's just having, this is just US dollar weakness off the back of that PPI figure. So yeah, we'll see what happens. But who knows? Happy haircut day. Thank you, Steve. I have this really weird thing because my hair is basically just dead straight until it gets to here, then it goes into a bit of a mullet. But it's dead straight. And I have this thing where these top bits here, they just poke out the side. So if they cut my hair too short, I look like a rock hopper penguin. Really bad. And she went a bit short today there, and she was like, we're going to have to get that rounded off, aren't we? So basically she had to take the shears to me and grind the top of my head, which is why it took so long at the hairdressers, which is why I was late. Yeah. I don't get it done very often. I hate sitting there at the hairdressers. You can only talk about weather so much, can't you? It's all you talk about. Where are you going on holiday? Isn't the weather nice? Literally, I've been doing that conversation for 50 years. Where are you going on holiday? Turkey this year. Anyway, talk about a non-event on the euro. That hasn't happened yet. That is 145. The rate is irrelevant. When you have a press conference, the rate is basically telling us what we already knew. Yeah, it's a non-event. There is no change. Yeah, we were on that last time. We were expecting that. Lagarde said they were going to do that. They did that. There is no event. That is just printed the number that we expected to be printed. So there's no reason to do anything, is there? This is what we're interested in, the press conference. This is where Lagarde is going to lay out forward guidance on what they are doing in the future. As traders, we want to know where's the euro going because we either need to buy it or sell it. We know what it's doing now, nothing. So it's all about press conferences, which is why we didn't get a lot of movement off FOMC yesterday. We know what the meeting minutes are. Yeah, it's the press conference. It's finding out what's happening in the future, which is the important part. Afternoon, Johannes, Kron, Neo, Champagne, Peter. I see you went for I see you went for the Symmetry Blonde highlights. Yes. Pretty much given up. Did I pay for that haircut? Thank you, David. Go to a Turkish barber. You can talk holidays then. Yeah, I can. Where are you going on holiday? Back to England. The opposite conversation with the Turkish barber, wouldn't I? Right, let's just see if the press conference is out. Short-term interest rate futures rise after PPI and unemployment insurance reports. I'm just waiting for the Lagarde press conference post to come out. It doesn't seem to be here. Oh, here we are. Oh, no, that's them doing it. I want the press conference. They normally post the press conference. I haven't yet. I can't type. ECB press conference. Oh. So this is the fun bit, basically. We wait to see the man in the suit. So the best part of the ECB's press conference is the man in the suit that removes, you can't see them because they're behind there, but there's these bollards to stop you attacking Lagarde. And there's a guy whose job it is to remove these bollards. It's very important. So we'll have a little guess, shall we? Is he going to be today bald or is he going to have hair? Vote now. Just because I've been to the hairdressers. It's either going to be a bald guy or a guy with hair, isn't it? Right. So while we're waiting for that, I might close out my Euro CAD. What's my Euro exposure? I've got double longs, double shorts. So I'm just going to close my Euro CAD, just stick that in the bank. Aussie US is going the right way. It's on its way to TP. I might let that run. Aussie CAD, I got short. The CAD's rallying. The CAD's weakening with the US. I need to put a TP on that as well. Just putting my TP underneath that low, basically. Right. So if you've got anything else you want to look at, let me know. Interesting looking bollards. What, my bollards? The ones that I drew. YouTube will bang you for these naughty drawings. They were square, everybody. I don't know what you're seeing, but I'm drawing bollards. Look. You see them there, look. There's the round bit, and there's the bollard. That's what's wrong with that? You can tell it's boring waiting for the yen to collapse, can't you? Dougal reckons he's going to be bald. We'll find out in a minute. We'll see. Stick that on cinema mode. Right. Well, that's not on yet. So I'm just going to stick the press conference over here. And as soon as that comes on, I'll move it back over so I can monitor that. So if you've got any other pairs you want to look at, let me know. Bald with glasses. Taking it one step further there, not just going bald or hair, also putting glasses on the guy. YouTube may ban him for his haircut. Might do, yeah. So there's nothing much else to look at today. Really, because we know it's all about the US dollar and the yen at the moment. So I'm happy to flick through all the pairs, but we're just waiting for mean reversion moves off of the US and the Canadian dollar at the moment. So they've obviously rallied. Somebody just reminded me, thanks, Mumo. Hit the thumb. Aussie New Zealand. Everyone wants to look at Aussie New Zealand. Look. So yeah, so we're basically mean reverting this US CAD move at the moment, but obviously when the press conference is over on the euro, we're going to get some movement on the euro as well. So we're waiting basically for the yen and the euro and the US dollar. So anything we look at here really is likely, the outlook is very much the same, is likely to just carry on in its big, wide, rangy movements at the moment. So Aussie New Zealand, I am in, managed to get in a second position yesterday now. So I've got those two back on. So we haven't gone anywhere on this one today. We've broken down. Obviously, I got out of half the position yesterday. All that profit yesterday got eaten. So I banked 2.5% yesterday, something like that. Ended up flat, basically because I got out of some of that US dollar Swiss. And I got out some of the Aussie New Zealand. So I've got, again, more positions on up here. So I had 2.7 on at the lows, down below the line, down here. So I've added basically the same size as I've got down here on here, but in the form of one market order that I took yesterday. I had a pending order to go short if we broke down. I've got a pending limit order to go short if we go up. So what I'm looking for is this reversal alert that we had to hold. And we didn't really get an M pattern off of it. We got 2 days of sideways, and then obviously we had that move off of the New Zealand. Going on with the press conference, it's all gone dark. So yeah, we're just holding at the moment. Again, this is what we are experiencing at the moment with this market. News, nothing. News, nothing. Yeah. So that's what's going to happen. Basically, we're waiting for the next news event to drive this. I'm hoping now, because we've obviously pushed up such a long way on this and we haven't profit taken at all on this leg. And if you scroll out a little bit further, yeah, we haven't really profit taken at all since the news last year. So this is last month, rather. This is the interest rate change or no change on the New Zealand dollar. Since then, we've just been rallying away from it. So I'm looking for a pullback on this entire move. So that whole thing there, this is roughly a 50% retracement. So if we can get out on that 50% retracement, that means that that profit that I banked there and that kind of gives me pretty much a break even on the trade, which is fine, but not ideal scenario, obviously. So waiting to see what happens on it, but we certainly started a profit take move on it. We've got a 23 retracement coming up within ADR today here. So ADR today is basically the 23. So if this is going to be a flag break, I would expect a pullback into this area and then buy. Here it comes. Here they come. Okay, so we've got hair over here. Okay, here's the bollards. So I don't know what you've got dirty mind, you lot. So I was just drawing bollards. Unfortunately, whoever said bald, Google, I don't think you're going to have much luck today because they both got hair today. And neither of them are wearing glasses. Unless They are just the security guards, and they are not the bollard removal people. They're not the bollard removal people. You may be in with a chance. We'll see. Doug Ross, they call me. Hey, he's moved. Put your head back. He's got a gun. He's going for the gun. I don't really just want to stand look at the back of your head, mate. Can you get out of the way? This is the funnest part of trading. This is what I live for month by month. The bollard removal guy at the ECB press conference. He is the highlight of my trading month. Here we go. Who's it going to be? I think it's him. I think it's him. It's him. No glasses. And he's got hair. Sorry, guys. You lose. He's Mr. Bollard as well. Wait. Bald. Did you see that? Dougal? I think I might give you 50% win on that one. Ready? Bold. Dougal wins. Anyway, right. So Lagarde is talking. We'll keep track of what she says on Financial Juice. But anyway, Beardy Bollard. Yeah, Dougal gets a 30% because he went glasses. If you hadn't gone glasses, I'd have given you 50. But that guy didn't have glasses on. So unfortunately, you get marked down. Anyway, so the ECB press conference is underway. So we'll keep Euro US dollar over here, just so we can keep an eye on what's going on with the euro. 15. So there's the whipsaw, obviously, off of the rate announcement. So now we're going to wait for the move. So you didn't go glasses. I'm sure you said glasses. I'm reading back. No, Dougal said bald. Oh, no, Johannes bald with glasses. So Dougal, you get a 50% because he only removed one bollard. So we'll give you a 50% for it. Can you see what it is yet? Shouldn't be saying his name. Why do they remove the bollards? That's a good question, AZ. I don't actually know the answer to that one. It's just to keep the press back, isn't it? So obviously, if there's bollards in your way and you did want to murder Lagarde with a knife, obviously you couldn't get through those bollards because that bit of ribbon would just stop you. It's like a force field. So that's why they're there. Basically, it's a force field to protect them. So no guns, no bullets get through them. So that's why they have to remove it, because otherwise the camera won't be able to see them either. No idea. Euro pound ADR. So Aussie New Zealand's rallying. So yeah, there's not much point in going through Aussie's rallying hard. Or is this Canadian? This is probably Canadian dollar dropping, I should imagine. Tell actually at the minute. Yeah, this is a bit of weakness in the Canadian dollar. So Aussie dollar rallying at the moment. Swiss franc completely undone. That move, look, that we just had on the Swissy. Yen, not really doing much. That's the Aussie moving. Aussie New Zealand, we know the Aussie's rallying a little bit at the moment. Quite a lot against the US dollar. It's quite close to TP, isn't it? Let that run. I'm tempted to move this up to there because I think this is probably going to be a V-shaped recovery, this US dollar move. I'm not, because we haven't heard from Bailey yet. So, but I kind of need to bank some money at the moment, so I'm going to leave it where it is. CAD Swiss, that's come down, still coming down. CAD Yen going nowhere. Swiss franc, obviously that's the rally off the Swissy. Euro coming down against the Australian dollar. So the Australian dollar is going for a rally at the moment. And the Swiss franc still, by the looks of things, a little bit. Euro pound ADR. So there's a double bottom potential there for a long up into that propulsion gap again. Euro pound, as we know, is completely sideways, totally range bound at the moment. You're bang in the middle of that range again. So we looked at this yesterday, didn't we? I remember looking at this yesterday. This was an ADR hit yesterday as well. So we had an ADR to the downside yesterday, which bounced perfectly. You got an ADR to the downside. So remember I said yesterday, if you go long here and that doesn't work out, you're going to get a short off of these lows, long off these lows. So it'll be first position, second position, and out on a retest of that move. But it did come straight up and out. So you've got another opportunity to go long, same trade exactly again. So we're potentially making a small range here. But obviously this thing's going to move in the next half an hour. So if you get in long now, you could, if Lagarde basically says anything that tanks the euro, obviously you could be in this for a bit. So just be a bit careful getting into anything euro ahead of, well, for the next half an hour-ish. Euro yen coming down nicely. That's in profit at the moment. Well, it's break even because of the spreads. So that's what it's cost me in spreads. So I'm sitting here still $87 in drawdown, even though I'm that far in profit on the actual position itself as an average. That is the cost of my swap. Euro New Zealand, we're completely undoing that New Zealand dollar move, look, because we've had obviously massive weakness. Sorry. We had that weakness in the New Zealand dollar. Strength, wasn't it? No, it was weakness, wasn't it? Sorry, yeah. So weakness in the New Zealand dollar, that's been completely undone today. So that propulsion gap is completely filled. But obviously this could well fly in a minute when Lagarde finishes talking. But that's an ADR 125 now, Euro New Zealand. There's quite a few 125s going in here, but this is off the back of this sudden move that we've just had on the Swiss franc. So Euro New Zealand 125 ADR. So if this is going to be a reversal in structure, this is exactly where you want to be buying it. This is a retest basically of the break. But if it is this bear move continuing, obviously we'll be looking for that type of movement. So if you go long here, you want to be getting out somewhere around about there in that propulsion move. Bit of volatility coming in. I might just Discord up there with the news, just so I can see the headlines coming in over there. So Euro New Zealand, obviously, potentially there's two structures at play here. You've got obviously a bear move and continuation, or you've got a reversal going in. So you can see obviously this is the sell area where they added into the sells. We hit that again, added again. So we know this is a strong sell zone. Sellers are not happy to let it go through that level. This is a strong buy, and we are potentially pushing back out of there. So the lines in the sand are drawn here and here. So it's either going to bounce back up or we're going to hit that and drop. Euro US we're looking at over here. So that's obviously potential for this to completely do a V-shaped recovery at the moment. We need to see what we have had. Nothing really come out of the Fed after yesterday that is going to help us at the moment. The market is automatically assuming, because CPI has gone up, that rate announcement is going to be now delayed. So this is an assumption by the market. You've heard the term buy the rumor, sell the news, or sell the rumor, buy the news. This is the market buying the rumor. Yeah, we haven't had any confirmation from the Fed yet as to what they have decided to do. At the moment, the Fed have said they're going to drop rates in June. No one's come out concrete and confirmed. I keep saying word Bailey. It's not Bailey, it's Powell. So we haven't had any confirmation from the Fed basically as to what they're going to do with interest rates yet. So if they come out and say, I don't know what the hell you lot are playing at, we're reducing rates in June. Yes, it hasn't come down as much as we thought, but it's coming down. over the quarter year. So we're happy with that. This will be back up here. Yeah, if they come out and say it looks like, as you've already surmised, because of CPI, we probably won't be able to do the June rate. That will continue to completely collapse. So until we get some confirmation from the Fed, this is a rumor. Yeah, normally they turn into V-shaped recoveries. Yeah. Or it's, it's just an overreaction by the market. Caution. Look at the stock markets yesterday. Boom. Absolute collapse. Panic. Holy crap. This isn't going as we thought it was. Pull all the money out of the stocks. Put it somewhere safe. Swiss yen. Yeah, that's what we've had again today with another Swiss franc rally. So we'll see what happens. But at the moment, this could well completely undo itself. So very nice long play from here. Look, we hit that level. We stopped. We tried again today. We bounced. We've tried again today. We've bounced. So this looks like a beautiful long opportunity. I'm already in this long, obviously, from yesterday, but potentially all the way back up to there. If you want to be cautious, as I am, coming up to here. So this may well form a propulsion gap. Yeah, and then we'll leave that in place and we'll carry on rallying. Or it's going to completely undo that move. Either way, you've got a nice long opportunity. So reverse alert went in yesterday on that one. You've just had one this morning as well. You're just about to get one on M15 and M5, but that's because of that whacking great candle. Pound odd. At the moment, we're just reverting the Aussie and the New Zealand dollar move from yesterday. But there was a short opportunity yesterday, just about at the 75, which you could have got on, but it would have been very, very hard to get on this yesterday because that extension was caused by that, which was basically a push and pull. There was no reversal alert in there. There was no price action to give you any indication, really. So it was a tricky one to get into. But if you did take that one yesterday, you're nicely in profit. But we are filling the propulsion gap, so you probably want to look at getting out of that now. So your reversal alert yesterday was there on that candle. So there you go. That's a propulsion gap filled. So that would probably be your exit if you're in it. Price pressures diminishing. Inflation will then decline to target next year. We got Williams speaking as well from the Fed at the moment. Oh, this will go today. Risks to growth are tilted to the downside. So she's being slightly bearish towards the euro at the moment. So really any reaction from the market. So there's pound odd, pound CAD, not really going anywhere. We've just tapped back up into that propulsion again, but not really going anywhere at the moment. There's no extensions at all, no opportunities to trade that very much. Swiss franc obviously is powering up at the moment, so we need to see if this gets sustained. Swissy is very erratic. Yeah, it's a safe haven. So if we get any more conflict news, you want to be doing nothing but sell against the Swiss franc. Same as with the yen. Pound yen, not really going anywhere. Every yen pair is the same. If that US dollar yen intervention or if the yen intervention move happens, boom, everything's coming down. You have your Lambo by my side. Yeah. My Lambo's always here. Always got my Lambo. Pound New Zealand at the moment, just reverting the propulsion gap. So there's your reversal alert, retest. So if it's a reversal, this is where you want to be getting in. If it's a continuation in market structure south, see, we were expecting it to continue to the downside. New Zealand, pound US dollar, obviously same thing as the euro US dollar. We need some confirmation from the Fed. So if you got in long, I mean, this wasn't as good as clean as the euro, but if you got in long, that's really the ultimate target up there. But we're going to need the Fed to come out and say, don't know what they're talking about. It's still June, guys. Or, sorry, yeah, you're right. It's now September. Maybe might do it next year. Yeah, I have to wait and see. No confirmation yet from them. New Zealand dollar CAD, we had that lovely big push down yesterday. Canadian strength with the US, so we're just retesting that at the moment. So again, looking for potential shift in structure and a profit take on this leg, but that is a 38 retracement already. So this could well be just a normal pullback now, and we are going to go next leg up. Again, that is going to be dependent on whether or not we get continuation strength in the US dollar, which will give us continuation strength in the Canadian dollar. New Zealand Swiss, waiting to see what the Swissy does. Nothing we can do that much at the moment, but that's a beautiful retest for a short. But obviously that's already played out. So it still looks like a lovely short to me. Come back down and retest this level down here. This propulsion gap will be a target to the downside. Williams is talking up the US dollar at the moment. Monetary policy is well positioned to achieve the Fed's goals. It's better to focus on trend for inflation, which is kind of what I was saying. You know, they may well come out and say, yeah, all right, we've had an uptick and a second uptick of 0.1. Yeah, but look at it overall, guys. This is a pullback and inflation is dropping. So therefore, June is still our target, which will be bearish US dollar. So this bull move that we had on the US, not necessarily going to be what the market thinks it is. New Zealand dollar yen, obviously still want to be shorting this in case of the Japanese intervention. So yeah, still shorts on that. New Zealand US, again, same thing. US dollar back up into here. This is a knee-jerk reaction, probably an overreaction from the market to what we saw yesterday with the CPI number. If you look at it, yeah, it's the second uptick. Yeah, so we've had two upticks now of 0.1. That's it. It's not big, is it? Yeah, it's only going to take one uptick down of 0.2 to put us back to where we were, which is on target to hit that June number. So just looks like a massive overreaction to me, but we'll wait and see. US dollar CAD, same thing. So obviously the US Lagarde's saying something. We will get a lot more data by June. We'll determine in June if our hope is fulfilled. So Lagarde's still targeting June, which is bearish euro. So as far as the euro is concerned, they are well on target. Yeah, 2.6. Target is 2. They're coming down in 0.2 increments. June, if they can maintain that inflationary drop, will hit target in June, which means that that interest rate will come down, which is bearish. So still bearish euro. Market's having a little bit of a reaction to that. So we'll be informed by new projection in June. A few members felt confident on inflation today, June again. So this, again, we haven't heard from the Fed yet, but this is indicating that the euro is going to be actually the first to drop rates, apart from the Swiss, ahead of the US dollar. So yeah, yesterday really screwed that US. We are not Fed dependent. Again, we're independent of the Fed of the US dollar. It's a bit like the Japanese saying we're going to intervene. No, you're not. You will do what the US dollar does, because everybody does, because they're the main currency. But you know, that's basically chest beating. But yeah, so we'll see. Anyway, let me carry on with this. US dollar CAD. So again, we're waiting for the Fed. So what we'll either get here with this US dollar CAD is a pushback and a retest of the propulsion area, and then we will buy it again. If we are going to be bullish on the US, if they come out and say, no, guys, I think June is still on the cards, then we're going to be basically back down to where we started. So this is not going to be a move. That's where we get those A-shaped recoveries and those V-shaped recovery moves. Yeah, so knee-jerk reaction, not what we thought, guys. Knee-jerk reaction, not what we thought, guys. Yeah, knee-jerk reaction, no confirmation from the Fed that you should be doing that, therefore undo it. Yeah, so all these USs look like lovely mean reversion plays at the moment until we get confirmation. US dollar Swiss doing it now. So again, this is exactly what I was talking about with the retest. So we've hit the top of the propulsion gap. So this is where that first hour's worth of buying, then a continuation. So this whole area really up to that wick there is sustained buying. So top of that propulsion gap that's just been completed and the bottom of this propulsion gap is kind of your propulsion area from yesterday. So this, if they're going to continue a bull move, is where you would buy from. Yeah. So this is where the market started to enter the position. They added into the position through here. If they get beyond that level, they go into negative equity. Therefore, they will keep adding buys here to make sure that the market does what they want it to, which is go long. If they want the market to go long, if the Fed come out and say, no, it's June, but they'll be going, shit, that was the wrong way to go, guys. We need to be going that way. And they'll undo the whole thing, which means that propulsion gap gets filled. But again, until the Fed come out and confirm anything, this is all speculation. Large majority of members wanted to wait for June. Yeah, nothing really interesting, as you can see at the moment. And US dollar yen, as we know. So nice hourly sell gone in there off the 153. So this 153 is kind of the next big round number. It's the only reason it's on the chart there. So that is starting to mean revert. Again, if this is not a move, so you can see that propulsion gap there, this propulsion gap here is all part of that 2-hour buy. So the top of that propulsion gap and the bottom of that one is kind of, this is whole area is just non-stop buying through that level. So we'll be waiting to see what happens when we get down below ADR today, if we get there, as to whether or not we find buyers. And whether or not they are wanting to buy the US dollar, or whether this was the wrong move and they've realized that they shouldn't have gone too soon. And we get the A shape. But obviously, if they do that, in theory, the Japanese will be making that decision for them. But we'll see. There we go. So that's everything. As I say, there's not a lot really you can read into anything at the moment because there's so much news affecting everything at the moment. It's just all over the place after yesterday's knee-jerk reaction to the US. But that is undoing itself very nicely at the moment. That one looks like it's about to hit TP, Aussie dollar CAD. Aussie US and Aussie CAD are pretty much the same trade. So I've got nearly 1% there. I might as well just take those off. I might just stick a trailer on that one. 95. I'm just going to trail that 10 pip trailer and take the TP away. Actually, what I'll do is I'll move the TP up to, I mean, it's unlikely we're going to get to 175 ADR, but I'm just going to trail the rest of that. So that will basically bank whatever minus 10 pips. So 1% bank for the day. There we go. So that's everything. Euro's powering up ever so slightly. I should have seen if Lagarde is still talking, shouldn't I? I've closed the feed, but she was talking 207, so I think she's still going. Yeah, still going. See, normally I draw glasses on people as well, but she's already got them, so that's not going to work, is it? Can't even draw earrings on her. Look at that. Now that is a scarf. That almost looks like a have sand dropping down. Can you? Getting artistic. Right, let me catch up on the chat. Yen is trying. Kevlar ribbon? Could be Kevlar ribbon. You never know. I reckon they got a few snipers and guns in there. I've just put a 2-ton weight on top of US dollar yen. That will work. I don't know why you're only using 2 though. The best thing to do is use 10. 10's much more effective. But a 10-ton weight, it's got much more chance of keeping that down. New Zealand dollar CAD, ADR. How much until drawdown control on US dollar yen? I don't know. It's down to you. How comes I didn't do it at 3%? Because I'm comfortable. Euro New Zealand 150 ADR. New Zealand dollar yen ADR. So ADR hits the upside. Drawdown control is down to you. Drawdown control is not a level. It's not anything. It's when do you think, right, I'm really wrong on this. This is getting too hot. I don't like it anymore. I'm going to shut some. I've had enough. Yeah, that's drawdown control. You decide when it is. If it's 2%, 3% for you, start at 2-3%. If it's 5%, start at 5%. If it's 1%, start at 1%. If you need to cut half of it, cut half. If you want to cut a third, cut a third. There's no rules with drawdown control. Basically, drawdown control is, I'm in a position, short. How confident am I that that is going to be the direction? Yeah, if I'm 80% confident that this is not going any higher than this, why would I do drawdown control? If my confidence level is, holy crap, the US dollar have just confirmed that they are not dropping interest rates, I'm out with 80% drawdown control right now. But I'm not, because the Fed haven't confirmed anything yet. And the Japanese have said 3 times this morning already, we are very closely watching this and we are going to intervene. So for me, the Japanese are saying we're going to push it 800% of ADR to the downside if you don't stop pushing against us. And we've had a massive move on the US dollar to the upside because the market has assumed the Fed is going to push their interest rates back. They haven't said that. So if I'm right in my speculation that this is a knee-jerk reaction from the banks and institutions in the wrong direction, which they do all the time, literally all the time, every pretty much time at the moment, when they go like that, they do that. Yeah. Where should I be? Short or long? So if I'm in 3% drawdown and I've got the Japanese threatening to drop this by 800% of ADR and the US having not confirmed yet that this move is wrong, but if they do, it's coming down, why would I get out? But if you're uncomfortable, get out. What's the worst thing? Just shut that position there. Shut half of that and shut a quarter of that. Take a 1% loss, 1.5% loss on your account. What's the worst thing that's just happened? You've lost 1.5% of your account. What do you do every time you press the short button and put a stop loss there? You lose 1% of your account. I've been in this for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days and I haven't lost anything. I'm in 3% of drawdown. If you were in this trying to catch the long play on this, you got in there long with a stop under there, it pushed up to there and it pulled back and you thought, I'm going to add, put a stop under there, you stopped out. You've just lost 1%. You're still in a trade at the moment, which is now broken up and you've moved it to break even. This comes back down to here and breaks you even, you've lost 1%. I'm short on this, I'm 3% in drawdown and 3 weeks later I've lost nothing. But I'm comfortable in it because my faith in the Japanese, rightly or wrongly, is still there. And I'm not convinced that the market should have done that yesterday. But I've also got in the back of my mind, if the market does continue that move, what do you think the Japanese are going to do about this? Yeah, so, but US dollar Swiss, I'm not as confident. But I'm not in much drawdown on it. Look at my average, it's there. So if you actually measure how far this thing needs to drop for me to get back to break even, it's 99 pips. It's 65 ADR. So if we get 1 ADR's worth of movement tomorrow, I ain't got to worry about it. Aussie New Zealand, I'm not confident on very much at all. So I took a loss yesterday. That position that was there, I closed it. I closed some out last week because I'm not confident. That's why I do drawdown control, because drawdown control I don't think should be based on a percentage or a distance. It should be based on your confidence level. If you're not confident that this thing is going to do what it normally does after it's done that, get out. But I've seen it do this 1,000 times, and I can show you 1,000 times on the chart. Moves like this that get mean reverted. That is enough to get out of a long, 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 long out. Short, 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 out. Yeah, I'm just waiting for the inverse of that move. Because that's what market does, isn't it? It moves up and down. But you need to be confident, which is why I say, you know, start with small lots. Experience drawdown. Johannes is crying. Why is Johannes crying? Because you got it wrong about the glasses. Afternoon, Virginia. Afternoon, Brian. Do you have your Lambo? Yes, already shown you that. Afternoon, Ismet. Haven't seen Stretch Vader. He's still here. He's still there. I can't stretch him. Yeah. I'm really weak. Still there. I joined a load of signal groups yesterday just for a laugh. Wow. Forex Signals Blue has just made 3,000 pips in their VIP channel on gold. You know why? Because yesterday we had a massive move on the US dollar and they just happened to be in the right direction on gold, which would have been down. Afternoon, Sarah. Damn, I missed Barrier Man today. Don't worry, Brian, we can sort that out for you. Oh, here's Barrier Man. There he is. Go back a little bit. Here's Barrier Man. And Barrier Man number 2 with a bald head. There he goes. Still talking. I'm just waiting for her to say something that's actually impactful. Still no movement. It's usually after the press conference, that's when we get the move. So when she shuts up, now that's when the market makes its mind up on what the euro's doing. Or the market goes, euro's not giving us any more information than we had this morning, so we're not going to do anything with it. That's basically what we're waiting for. Champagne Pappy, €2 for the euro US dollar to power up. Thank you very much, Champagne. That's very nice of you. €2 for the euro US dollar to power up. Now, did you help it? When did you post that? Within the last 15 minutes, isn't it? So it looks like you are actually helping. So thanks for that. But what you've actually done there, without knowing it, is you've converted €2 into pound. So what you've just done is short the euro pound. Oh. How many Europeans voted for Lagarde? The same amount as Sunak. Well, Lagarde's in charge of the ECB. I don't know that we actually vote her in. I think she just gets given the job by whoever is in charge of. Well, she's in charge of the bank. So I don't know who gives her the job out, to be honest. It's probably the government, I would imagine, but certainly wasn't Sunak because he's in charge of our country. My new drawdown idea is if it's just one squeeze in my portfolio, I'll watch the level, but let it get as big as 15% and then cut 5%. Keep doing that until you get an exit. Yeah. So that's not dissimilar to what I do, as you've probably seen. So I will let my trades go to usually when I start getting to the 3 to 5% area, that's when I'm doing aggressive drawdown control. I have let trades get up as high as 7, 8% because we are reaching a level that looks good, or there is a fundamental coming out that will help or hurt. And if it hurts, that's the exit. If it helps, that's when the profit take move generally tends to kick in. So there's nothing wrong with letting your drawdown go high as long as it's within your comfort level. And that's what I use as my overall comfort level. When that starts getting to the 20% mark, that's when I start thinking some of this is getting a little out of hand. I need to deal with it. But again, it's all completely personal preference. It's going to depend on how your day, your week, your month, your year is going. It's going to depend on a lot of stuff. If I've got 14% of drawdown, but I've banked 20% in the month, it's irrelevant. It doesn't matter, does it? But if I've got very little in the bank as I have this month and I've got a large drawdown, that hurts. But I've had a good quarter on this account, so that's not a problem. There is no rule. I've tried to put rules in place. When I did the bootcamp, I tried to come up with a rule for drawdown control, and I came up with kind of 1.5 to 3% as an average of where you would tend to start doing drawdown control. But it doesn't take into account how many positions you've got on, what your lot sizing is. If you're getting in with a very large initial lot size, you're going to hit drawdown control very quick. If you're getting in with a 0.05, yeah, it's going to take a long time to get to 1% of drawdown. Well, it depends on the size of your account, but it's all completely discretionary, this part. There's nothing you can really say this is what you do and when you do it. So I was just going to look at that Aussie US running. She is a robot. Could well be a robot. Is it a good idea to do DD control just to keep always 4 to 5 positions on? So if 5, 6, 7 positions is on, would close the oldest position. Yeah, you could do that. Again, that is something that I looked at as an option. It doesn't work like that, though. If you look at the Aussie, look at Euro, US dollar Swiss is probably the best one because I've got 1, 2, 3, 4, 5, 6 on that. So are you saying now because I've got 6 positions on, I should be doing drawdown control? Look at it. It's coming down quite hard, isn't it? Why would I want to do drawdown control because I've got 6 positions on this morning? So basically, I was right. Can't really do that either, can you? Especially if you're using lot multiplication. If you're not using, I initially, when I started position trading, I didn't use any lot multiplication at all. So every trade was a 0.1 or whatever it was. And then the next one was a 0.1, it was a 0.1. And I was just scaling in and DCAing into the positions. The problem with that, it's not necessarily always a problem, but it does make your trades take a lot longer to play out. And at the moment, especially with interest rates as they are, swap fees are big. So that would cost you a lot of money. When you start to slightly increase lot sizing, not martingale going nuts, but ever so slightly increase the lot sizing, it brings the average closer faster, which gives you quicker exits. So when you get into 6 or 5 positions, you've got an awful lot more lot size on, which means that every single time you get an ADR hit to the downside, your P&L actually gets very small, very fast. So again, I've said it before, you've seen me in here in 7 to 10% of drawdown in the morning. And then the next day, I'm sitting in 6% of profit in my account on 1.5% of drawdown. And that's happened within 24 hours because we've got quite a large lot size on. But because it's been pushing such a long distance to get that many lots on, the market, when it pings back, is very, very quick. It's the climbing up the stairs, falling down the elevator shaft. So those elevator shaft collapses tend to make you a lot of money very quickly. So you don't really want to start doing drawdown control when you get to 6 trades, because that's the point when really you could just about make an absolute fortune. Again, you need to look at the big picture as to what is everything doing. what's your exposure? Yeah. So on the US dollar, I've got 4 short. I'm overexposed. I shouldn't be this deep on the US dollar at the moment. But that's got a trading stop on it. Doesn't matter. So take one of those away. One of those is the yen. If the yen intervention happens, I'm not going to care. If the yen intervention happens, these two are going to get better anyway. Yeah. But so really my exposure is on US dollar Swiss and Euro US dollar. Euro US dollar's at break even. So I'm not going to do drawdown control on the US dollar Swiss, because although that looks bad on paper, there isn't really a lot of exposure on the US dollar. One of them is in profit. One of them is on the verge of getting an intervention, which is going to make me 3 to 5% on my account. And the other one is about to close out in profit. So really, I'm stuck in 5.5% of drawdown on the US dollar Swiss, which is dropping like a stone. That's my decision-making process on whether to do drawdown control or not. But that decision-making process is going to be different every time, dependent on your exposure, how much you've banked, what news is coming up, what news we've just had. I'm not convinced this is the right move. So I don't want to do DD control because I don't think necessarily that is what's going to happen. If, however, this pushes back up to there and we triple top it, I might go, yeah, that's not right. And I will then start to do drawdown control. I'm going to wait for the market to show me who's right before I make that decision. And obviously, you can do it automatically by using these things. Taken out of my hands then, isn't it? That rallies up, I'm going to get out. And I will leave that there because that is probably what I will do. Brian needs a towel. Where's your thing, Brian? You've got your outfit. Shouldn't need a towel if you've got your white overalls now. Could you please remind me what the 33% in auto DD control label on your dashboard chart means? It means that if any trade gets to 2% in drawdown, it will close at 33% of it. So that's just the setting I've got on my VPS. The guy's talking about oil at the moment. We won't wait until every item in inflation is back to 2%. So basically, we're not going to need to hit 2%. This is what I was saying earlier, yeah, about the numbers here. We're at 2.6. Target is 2. We're dropping at 0.2. In the next 3 months, if that continues, that rate of inflation drop, they will hit target. What Lagarde has just said is we're not going to wait to hit before we drop rates. If we look like we're going to hit them, we're going to drop rates. Yeah, because they don't want to overshoot down to 0.5%. They want to keep it around about there, which means that this thing will drop very, very quick, which will obviously devalue that euro. So she's saying all the right things to keep the euro kind of under wraps and weak. He says as it completely screams through the ceiling. This is the US dollar dropping, look. Yeah, so that basically means any trade, any individual trade that hits 2% of drawdown will automatically have 1/3 of its size shut. Auto DD control. Notice using lots on your trades. Using lots on your trades. Is it because some of them are triggered manually? I thought the EA had a fixed lot setting. It does, but I don't use that. I never have. Never use a fixed lot. There is a fixed lot setting, but I would never use that. I risk a percentage of my account. So I'm risking 0.5% on the trade. That way your lot size is dynamic. If you use the same lot size on every instrument, you have a completely different risk on every trade. You want to risk the same amount, ideally. You don't have to, obviously, you can do what you like, but I prefer to risk the same amount on every trade that I take. So if I get into a trade short and it moves 1 ADR against me, I will be in drawdown by 0.5% of my account. Yeah. So from there to there on this particular instrument will cost me 0.5% of drawdown. No, sorry, 1 ADR, not that was half an ADR. 1 ADR, so that, you know what I mean. For me, the break-even line really helps with drawdown since I got FIFO. If I have 3 positions on and averages between the 3, I take off the first. Yeah. Way to do it. My €2 crashed the market and pushed up the EU. I use 1 to 10 million leverage. God, can you imagine having a 1 to 10 million leverage account? Every tick would be worth about $100. Before news, you say to close everything on green. If only some entries on a pair are green, do you close them? Yeah. So before a news event, what I tend to do is anything that is in profit that is going to be affected, I will shut it. I didn't today because there was no expectation. So if it's a news event that there is a high probability of the market moving hard, like FOMC meeting minutes and press conference, CPI figures. Yeah, CPI figures, we never, as you can see from yesterday, we never know what the CPI numbers are going to be. And they really, really affect the market. The European interest rate, however, was always going to be 4.5. So I knew that there wasn't going to be movement off of that. What I did know was that Euro would probably move off Lagarde's speech, which we still haven't had any much, but it potentially still will when she shuts up. So I didn't need to close anything out. Well, I did actually, didn't I? I closed out the Aussie US. No, that's when I've got on the Aussie CAD. But the Aussie CAD is not going to be affected by the Euro in any way. It will. I mean, everything will move if there's a big move in one instrument, but it won't be massively affected by it. So I would only usually close out stuff that is going to be affected. So something like FOMC affects everything. Yeah. The Canadian unemployment numbers won't affect the Euro or the Aussie. It might affect the US dollar, but it will definitely affect the Canadian dollar. So if I've got a profit on the Euro yen, for example, there, and we've got the Canadian unemployment figures coming out, there's no point in closing that. But if it was the US dollar CPI, everything's going to go mental. So you shut your profit, you take your profit and you put your profit down there because you can't get your profit back if it goes into drawdown. You can, obviously, if it comes back your way, but you want to bank it. But not on today's. Wasn't really anything of interest. But she's not really said anything here. That is really noteworthy as such that we don't know. Apart from the fact that they are segregating themselves from the US in that they're not going to wait for the US. We all kind of assume that we are going to wait for the US dollar to move first because that is typically what historically happens. We wait for the US movement and then we jump on. But it doesn't seem that that is going to be the case. If that US dollar CPI number is going to mean they push back their interest rates, the Euro is not just going to go, all right, sorry, we'll wait for the US dollar and jeopardize their inflation going into disinflation, which is bad. So that 2% target, they do not want to overshoot that by a lot. Yeah, it could drop down to maybe 1.5 or so, but we do not want it. 2%, the inflation targets are set at 2% by everybody for a reason. It keeps your economy gradually moving in the right direction. Prices go up. People get paid more. Businesses earn more money. Stocks do well. Your gross domestic product increases. It keeps unemployment down because everybody's doing well. Nobody's having to shell out too much money, which means that they can stay in lower paid jobs, which keeps unemployment down. Yeah. Your interest rates can be lower, which encourages spending. Yeah. So this needs to be ideally somewhere between 2.5%. One's a bit low, actually, 1.5%, 2.5%, ideally forever. And what you would have is a happy economy with everybody dancing around with drinks in their hand, wearing flowers on their heads, and everybody's happy. But that's not the real world, is it? So what they do not want to do is have that collapse too fast, because what that means is they need to drop that very, very, very quick, which upsets their currency, devalues their currency, which stops investment, which reduces GDP, which further creates deflation. Yeah, so there's a very, very fine balancing act, and that's kind of what she's saying here, or disinflation as she's calling it, which is basically the same sort of thing, just the rate of inflation slowing. So that's basically what they're saying here. They're not going to wait for June, or not going to wait until that 2% is hit before they reduce interest rates, because they don't want to overshoot, which is a genuine danger. Aussie US closed out. So still no movement on anything. So this is where we started with the news, or rather there. And that's where we are. So there's no movement off of this euro at all. Just literally whipsaw. So yeah, nothing much to report there. So we have got Barkin speaking at 3. As Williams had just spoke. So we got Barkin speaking at 3 o'clock. Any of these Fed members could upset the apple cart and give you some kind of information or clue as to what's going on with that US dollar. So just be aware of that at 3 o'clock. Only other news we've got today is the 30-year bond auctions at 6 o'clock. So that will... this is an opportunity for the Japanese to show their hand as to whether or not they're going to buy more bonds. So there may be some movement off of the yen there, and obviously off of the US dollar as well. But that's it for news today. So if we don't get Barkin upsetting the apple cart, and we don't get any movement off of those bond auctions, which we don't tend to, that's it for news really this week. So we've got University of Michigan tomorrow, and tomorrow morning we've got the GDP for the pound. So upshot of everything today, not a lot. We haven't managed to do any progress there because we've had no information that's really given us a clue as to what that US dollar move was yesterday, whether it's going to be sustained or not. The market is, if anything, weakening against that move, but not with any great pressure. There's no movement from the Japanese as such. So if you look at what happened yesterday, obviously with the rally, this morning we opened up here. We pushed down, we pushed up, we retested the high, and we dropped. So we've actually gone nowhere today. So absolutely nothing but 3 big mentions from the Japanese about intervention. So they are still threatening it. And that's about it. So there's nothing much else really we can read into today that gives us any clues as to anything. Nice big move on the Swiss franc though. So a little bit of Swiss franc strength, but that's obviously all undone against the Aussie because the Aussie's rallied. Everything's just literally push, pull, push, pull, push, pull. No direction on anything. Again, you get one big news and you get nada. Aussie New Zealand is a prime example. Look, just shocking. Nowhere. Been on sabbatical, jumping back in. Hope all is well. We're using a new EA. I'm using my new EA, yeah. Watch the tutorial. I'm a little confused. Can't really help you with that. XR update news. Sorry about that. Sorry you're confused. Ask any questions if you want, but it's just a different EA. I ought to do a little table, shouldn't I? What's the difference between the two? But I mean, there isn't much difference. One of them uses market reversal alerts and market structure. The other one doesn't. One of them has got buttons so you can automate any trade and turn it into position trading. The other one doesn't. Other than that, one of them's got aggressive drawdown control. The other one hasn't. Apart from that, they're very similar. So more flexible, basically, is the point of the new EA, and speed. It is it backtests in a second. It's backtesting. It's phenomenal. Honestly, New Zealand looks like it might be sideways for a while. Yeah, there is that danger. The next news we've got for the Aussies is unemployment next week on Thursday. The next rate is next CPI figure is the Wednesday after. Oh God, then we hit the next monetary policy for the yen already. There is no Aussie rate announcement. They're doing quarterlies, aren't they? Yeah. So there's nothing coming up on the Aussie for a while. So yeah, there is a potential for this just to grind. I mean, there's a potential for it to. Obviously, that move we know was just ridiculous because there was no reason to do it. We had exactly the same news here as we did here yesterday, and the market did the inverse this time to what it did there for no reason. There's no reason for the New Zealand and the Aussie to do that, or the New Zealand dollar to do what it did yesterday. Nothing changed. Again, they said nothing's changing. They told us nothing's changing in the near future. So why on earth would that happen? Why on earth did that happen? Just what the market's doing. It just needs to do something with it, doesn't it? So there is a potential that we spend the next 3 to 4 weeks just grinding back. However, if this is going to be a profit take move, I would expect it to be quicker. So I would expect us to be down there by the end of next week, really. That should hopefully tell us if it's a profit take or whether it's just the market grinding and doing that over a long period of time. If you look at it on a daily chart, it's not doing anything really different, is it? Look, spent a while grinding that way, 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 spent a while 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 that way. Where do we spend a while doing next? Just not doing anything different, is it? We're ever so slightly contracting. So the next move is down to here, which is basic. But how long that will take, I mean, that's a month. That move there took a month. So extrapolate that into the future. Yeah, it's going to take 2 weeks, 3 weeks, maybe, to get back to break even. I don't know. If it's going to be a new leg in a bull run, then it should happen a lot faster because they'll be wanting to get more positions on. But look at it. Not bullish. Not bearish. It's just there is, like I keep saying, there's no fundamental advantage for either of those at the moment. There's no reason for it to be long or short. It's just a horrible grindy squeeze at the minute, which we'll probably undo. But wait and see. This is the most frustrating year. I've said it before. This is the most frustrating start to a year I've ever had. It's just shocking. The price action is all over the place at the moment. Markets are all over the place. Nobody knows where anything's going. Nobody knows what banks are doing. We had the I can't remember who it was. can't remember if it was on here or not. I'm just going to scroll back. I was just looking for the word war. Right, Kim Jong-un. Now is the time to be more prepared for war than ever before. Coming from Kim Jong-un, the man that can't fire a missile. I don't think it is necessarily on Financial Juice newsfeed, but there was somebody from Europe, and I can't remember if it was someone from the ECB or someone from NATO, said in the last couple of days, we should be prepared for war in Europe more than ever before because of what is going on in the Middle East and what's going on in Russia and Ukraine at the moment. Because with the situation we've got at the moment, it only takes one thing to spark it, basically. So you've got the UK and most of the West, NATO, US, all backing Israel. There was a missile fired from Iran into Israel yesterday. Yeah. So if Iran invades Israel, we have to back up Israel. Yeah. So that brings us into the Middle East conflict. If Trump gets in, backing for the Ukraine financially for missiles and any armaments will be withdrawn. We have already said in the UK, we'll carry on giving our 0.2% to you, which is nothing, but they're getting pushed back in Ukraine. So if Russia expands into Ukraine and that gets completed, what happens next? Where does he go? So we've got NATO with Russia and Ukraine, and then we've got the whole of the West with Iran and Israel at the moment, all massive tinderboxes, and it takes one missile in the wrong direction and that whole thing explodes. If that happens, nothing fundamental is going to mean anything at all. And the market at the minute is jittery constantly because of what is going on in the world at the moment. We have no idea whether interest rates are going to drop and when. We have no idea if this inflation is going to get under control. It looks like it is, but it seems to keep bouncing back and we can't get on top of it. And if anything happens with either of those conflicts that expands, they're not going to know what to do either. So the markets at the moment are just stuck in this weird range, which sometimes is contracted, sometimes is wide, but there's nothing actually going anywhere. When you look at things on higher time frames, nothing is really going anywhere, is it? Look, going back to 2023, back to September, 18 months, we're not going anywhere. Yes, we're getting moves, but we're not actually making any progress. The market has no clue where it's going. The stock markets have recovered from the dip, but they're not going anywhere now. Look at yesterday, how scared they got yesterday, massive sell-offs. So, it's a very odd time to be trading at the moment. Sitting through stuff like this virtually everywhere is very, 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 very difficult. You can't, for me personally, the way that I trade with my strategy, I'm reliant on market structure. Hence the name. Market structure comes from strength of movement. Yeah, we're either getting no strength of movement, no signals, or at the moment we're getting strength of movement and one huge bias for a month or so, and then it cools off and dies, which makes it very hard to make money because our money is made on the mean reversion, the profit take move, and there doesn't seem to be as many of those happening at the moment, which makes it very difficult. Just a very, very difficult time to trade. Barkin is speaking. Barkin is barking. So Lagarde's still going. This kind of sums it up, doesn't it? There's a lot of talk at the moment. No action. Look at the EC. Look at the Bank of Japan. Yeah. Talk a good talk. Yeah. Yes, you stalled the market out. Well done. You threatened everybody and they went, oops, we better not. And then you threatened everybody again this morning. Why didn't you do anything there? You threatened everybody here. Market pulled back. It came back. You started threatening again. You didn't do anything about it, did you? You did last year. You did the year before. We're expecting you to. Who knows? We'll wait and see, won't we? But very, 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 very difficult times at the moment. So ECB, nothing but a whipsaw. Negative euro at the moment for the last half an hour. So basically the market just not really liking anything she's saying. Oh no, she has finished. I was delayed. It's only just finished, literally just finished. There we go. So ECB press conference is over. There we go. That's all we got for you today. There's nothing much else to discuss, really. We haven't had anything move today. We've had a lot of ADR hits, but not a lot of movement because all the ADR hits today are inverse of yesterday's ADR hits, which are inverse of the previous day's ADR hits. So for 3 days, basically, we've done that. There we go. The ICT traders know where the market will be. They know exactly where the market will be. Up and down, grabbing that liquidity from your retail stops. I think it was Macron that said it. Yes, it might have been. Yes, I think it might have been Macron talking about the war. Quite scary. I'm surprised the market didn't react more to it. To be honest, I don't know where I saw it. I thought I saw it on here. Yeah, I don't think it was on here. But yeah, I was surprised the market didn't move more. You know, he's basically saying Europe needs to prepare for war, for all-out war, for World War III. Yeah, normally when that sort of thing happens, the stock market collapses, the oil price flies through the ceiling. But we got the stock market collapsing and oil flying, but not because of that. It was because of what happened with the US CPI numbers, which have, as I say, have still not been confirmed. So we'll see. A little bit of a rally going on the Swiss, on the US at the minute. Another little push starting. So press conference is over now for the ECB. So we will probably see if the market is going to go for it. There will be a move now on the euro, but ever so slight bullish move going on at the minute. Apart from this, because the US dollar is rallying a little bit. So not a lot, is there? Did you get the haircut today? Yes. For some reason, I look different. That's because I've had my haircut. Which is why I was late. I was 15 minutes late this morning because I got stuck in the hairdressers. I won't go through it again, but basically I've got these little tufts. I will go through it again. I've got these little tufts which make me look like a rock hopper penguin. And basically the hairdresser had to spend ages on it. So, yeah. Well, good point. I still paid the same amount for my haircut, but I got twice as long in the chair. Value for money. Bad point. I was 15 minutes late for the stream. Anyway. I'm just sticking with the daily and weekly trends. Yeah, do it. But my point, Stephen, is staying with the daily and weekly trends isn't easy. Yeah. There isn't any. There was no trend there. There is potentially a trend there. Yeah. There's no trend. This is the problem with trend trading is, you know, this is a range. We're just bouncing off the range highs at the moment, back down to the range lows. So you wouldn't have caught any of that because you'd have been shorting only. So it pushed up, which said, let's go long. So you wait for a pullback to go long. You had one pullback there you might have got a trade-off of. Look at the wicks. This is trading at the minute. It's just dire. Look at these wicks. There's a hell of a lot of movement. There is no direction. There's very, very little that is trending. Yeah, you know, December and November, you're in a long trend. January, you turned short and then went back long in February, then turned short in March, and now it looks like you might be going back long. No trend. No trend. This is where we were 1st of December. Haven't gone anywhere. Literally 4 months sideways. Very, very, very difficult with any strategy. It doesn't matter what strategy you are in at the moment. If you're a trend trader, you're getting killed. If you're a mean reversion trader, you're doing all right. You're always doing all right as a mean reversion trader. That's why we're mean reversion traders, because the market spends 70%, 80% of its time mean reversion. There is no trend. But, this is why my argument for people that trend trade, I'm not having a go at you. I'm just saying my argument for trend trade. There's one. My argument for trend trading is by the time you've identified you're in a trend, which means you've had a push and a pullback and a push. Oh, we're on a trend. You've missed the move. Very hard to trend trade. That was your only opportunity to go short on that trend. And that trend only had 2 legs. Then it mean reverted. Low, high, higher low, higher high. That was the trend. By the time you'd identified the trend, you'd missed 50% of the move. So if it pushes down and then it starts to pull back, you move to break even, what do you get? Nothing. Why trend trading doesn't work. It's virtually impossible to make money trend trading. That was a good one. Pushed up. But that is when you get your confirmation there that you are in a trend. Excellent. We're in a trend. So let's buy the next pullback. Oh. You've got to be preemptive. You've got to assume a trend if you're going to be a trend trader. You have to go, right, there's a long, there's a short. I'm going to assume this is a breakout long. You've got to take that second leg. If you miss that second leg, you get the confirmation the trend is in existence. The market structure quite often finishes, doesn't it? Difficult. Everything's difficult. It's not an easy job. Only way to trend trade effectively is to get in early, yeah. Which means you're about to get into bigger squeezes. Yeah, you need to get into a trend before the trend starts. So, you know, in futures, if you trade futures, you can identify when a trend is ending in the futures market because volume contracts. Yeah, which is what we can see as traders as divergence. Yeah, in the futures market, because you have centralized volume, you can see volume contraction. So when you get lower lows forming on lower volume, that is equivalent to what we, this is again why I use the RSI. The relative strength is going up, price is going down. That's indicative of a burnout in a trend. What you would see on a volume profile, I mean, you can't trust volume on your broker because it's obviously not centralized. Can't really see it on this chart. Yeah, I mean, you can't really see it on it, but I mean, it is ever so slightly dropping, but you can't see it because it's not centralized volume. But you see volume start to drop off. There's volume dropping off a little bit more as we start that trend back up. So it's basically loads and loads of people, lots of strong movement, and everybody that started up here is now getting out of their trades and they're not adding into the trades anymore. So what you get is less people adding to the trades, but not many people want to go long on it yet. So what have you got? Low volume, but you keep making lower lows because there's nobody interested in going this way. What then happens is people go, well, this has been going on for a long time. We'll add some into this. It's pushed down, so we'll add a bit more in. It's pushed down, we'll add a bit more in. So what you tend to do is you get volume coming in as everybody exits their positions, which gives you relative strength to the upside. But market is still making new lows. Divergence. This is why so many people love trading divergence. But as you can see, you got divergence. Yeah, failed. You got divergence. Failed. Divergence worked. Still only works 50% of the time. Exactly the same as any indicator. Flip a coin, you got exactly the same odds. It works sometimes, sometimes it doesn't, but it does give you an indication of when a trend is starting to ease off. But higher time frames, it's obviously a lot more reliable. But for things like futures trading, it's God. Virtually all professional prop firms and professional institutional futures traders all use volume divergence. It's one of the key strategies you get taught, which is why people pay attention to volume profile, because you're looking for weakening volume at volume nodes, meaning that you're not going to get through it, meaning that that movement is going to change direction. It's a very hard thing to trade. Only way to trend trade, I've already read that. Patience with low risk, yeah. Yeah, I mean, there's 1,000 ways to get into trades. You know, I use the RSI because it's very reliable sometimes. Yeah, I mean, look at this chart here. There's a short there, lovely. There's a long there, lovely. There's a short there, lovely. There's a long there, lovely. There's a short there, lovely. RSI, 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 that one there, RSI, that one there, RSI. Works beautifully like this. But then again, divergence would help you with this. But this is not a trend. Divergence doesn't work very well in a range-bound market, which is where we spend 80% of our time. There is no better way, is there? Get in, wait, see what happens, get out. That's your job. You can't, if you're trying to predict the future, you're never going to do it. You're just going to butt your head against a wall forever, as we know. Right, I'll leave it there today. I'll be back tomorrow. So Euro's back to where it was. So tomorrow we'll be on for, did I decide to come on for Michigan? No, I'm coming on tomorrow morning. So tomorrow, basically, we've got GDP for the pound, and we've got Michigan in the afternoon. So the Michigan sentiment figures do quite often send the market into a large move, but they're non-directional usually. So either tomorrow, Michigan will do nothing, or, sounds obvious, doesn't it? It'll either do nothing, it will drive the market on the way it's been going with the US, or it will undo that US move. One of those three things is going to happen. I can guarantee it. I don't know which, and neither does the market. So we'll see what happens with Michigan tomorrow afternoon. But I'm going to stream tomorrow morning, and we'll look at what's happened with the GDP, because the GDP is something that's got more chance of moving the pound and getting a move going on the pound tomorrow. But that's all the news we've got. So I suspect the market will just unwind what we've had today and yesterday over the next couple of days, and tomorrow will probably be the start of it. But it could well be that we get that move starting on this yen. We just don't know, do we, what's going on with any of this at the moment. So it's just a case of having a look at it every day, and as we always do, and see what happens. But right now, if this yen continues to push off beyond ADR today, I will give it another day tomorrow, and then I'll start to back out of it because it's just not going anywhere at the moment. I'll use a 50 SMA overlaid on the RSI, That's a TDI. But yeah, use whatever you want. It doesn't matter, does it? Your joy is 50-50. No one's right or no one's wrong with the strategy. Everyone's just got an opinion. That's it. Best you can hope for. I have a live cash account and a prop account, both with the same EAs on them. The real account makes money. My prop challenge loses money. You are being scammed, Dougal. Yes. They're all going bust. It all starts with them stopping taking US clients. CTI have done it this week. Regulation is coming for prop. There's only so many times you can sell someone a demo account for $500 and get away with it. It's like selling hot air or selling air. Yeah, they're selling you oxygen. You know these people in America that go into oxygen bars to consume oxygen. I do that for free. Is that a scam? Yeah, damn right it is. Idiots paying for oxygen. There you go. That didn't cost a penny. Demo accounts for $500. I'm late. Have a good day. David, you are very late. I'm just about to go. You've missed the entire stream. Well done. You are late. Very late today. We've done everything. Nothing's moved. We've just basically gone back to where we were. So you haven't missed anything. Nothing's really moved much. So yeah, I'll be back tomorrow at 8 o'clock tomorrow morning. So if you're in America, you'll probably be asleep. So watch the replay. Barkin's talking, so just keep an eye on the US over the next hour. Market seems to be running a little bit at the minute. So yeah, tomorrow morning I'll do a quick overview of everything, but it'll probably be a fairly short stream tomorrow morning because there's no news between now and then unless that Japanese yen has moved. We've had any conflict anywhere escalate or anything like that. Other than that, that's it. So yeah. All right, have a good one. I'll be back tomorrow. Anything you need, let me know. I'll be in Telegram or Discord. Other than that, have a good evening and I will see you guys next time.